Business owners, tax surprises are brutal. They hurt because the number is higher than expected, and they hurt because the timing is usually awful. A bill shows up when your cash is tied up in payroll, inventory, marketing, or a slow month. This video explains why tax surprises happen, what organized books actually mean, and how getting organized earlier protects your month later. I'm going to keep this simple and practical, and I'm going to speak to you as a business owner who has a lot on your plate. So why do tax surprises happen? Tax surprises usually do not come from one mistake at tax time. They build all year long, and they show up when the numbers finally get cleaned up. One common reason is higher profit than you expected. Many business owners look at their bank balance and assume it represents how the business is doing. A bank balance shows cash on hand, but it does not show profit. Profit is your income minus your expenses, recorded correctly and consistently. Taxes are based on profit, not your bank balance. Another common reason is missing or messy expenses. Expenses get missed when receipts are scattered, when transactions are not categorized, or when personal spending is mixed in with business spending. Missing expenses can raise taxable income, which raises what you owe. Messy expenses also make your reports unreliable, which makes planning harder. Another reason is confusion around owner pay. Business owners pay themselves in different ways, and the method matters for reporting. Owner draws, payroll transfers, and reimbursements need to be recorded correctly. Disorganized books often mix owner pay with expenses, or they hide business expenses inside personal categories. That confusion can lead to inaccurate reports and bad planning. Income tracking can also cause surprises. Many businesses receive payments through multiple platforms. Maybe you use Stripe, PayPal, Square, Shopify, checks, or bank transfers. Your books should reflect all income accurately, and they should also reflect processing fees, refunds, and chargebacks. Missing income creates risk, and misreported income creates confusion. Quarterly estimated payments are another area that creates surprises. Some business owners should be paying estimates, and others should not. And the right amount depends on accurate numbers. Accurate numbers are harder to get when bookkeeping is behind. Now, organized books do not mean perfect books. Organized books means your financial picture matches reality and your report makes sense. The first piece of organized books is reconciliation. Reconciliation means your bookkeeping matches your bank and credit card statements. Each month, you should close with balances that line up. Reconciliation catches missing deposits, duplicates, and transactions that were not recorded properly. The second piece of organized books is consistent categorizing. Categories are the buckets that build your profit and loss report. Consistent categories make your reports useful. Random categories make your reporting confusion, and they make tax prep harder. The third piece of organized books is separation of personal and business expenses, business spending. Mixed spending is one of the fastest ways to create stress at tax time. It adds cleanup work and it increases the chances of mistakes. Clean separation creates clean reports. Organized books helps you plan because you can see your numbers early. When your profit and loss is accurate, you can see your profit during the year. When you can see your profit during the year, you can plan for what you will owe. Organized books also help you set aside money consistently. You can build a habit of setting aside money every week or every month. You can base that habit on real numbers, not on guesses. Organized books protect your deductions. A deduction does not help you when nobody can find it. A lot of deductions are lost because expenses were not categorized correctly, or receipts could not be located, or transactions were left uncategorized. Clean books capture recurring expenses consistently, and they reduce the chance of missing write-offs. Organized books also prevent what many owners call surprise profit. Surprise profit happens when cash feels tight, but profit is actually higher than expected. Cash can feel tight because money is constantly moving. Payroll, subscriptions, marketing, inventory, contractors, and equipment can make the bank balance look steady even when profit is growing. When books are cleaned up, the profit numbers appears and the tax bill arrives right behind it. Organized books give you visibility while you still have options. Now, you don't need to become your own bookkeeper to reduce tax surprises, but you do need to get your information in a place where a CPA, such as myself, can help you quickly. So I'm offering a free 2026 early bird tax preparation session for your 2025 return for business owners in Montgomery, Alabama area. During the appointment, we will review your income, deductions, and credits. We will discuss life and business changes that affect your 2025 return. We'll also go over required documents and deadlines, and we'll answer tax-related questions and outline next steps. You can book your free session through the link in the description.